Welcome back to Options Action. Raytheon Technologies underperforming the broader market so far this year, down more than 2%. But you know what they say, the best offense is a good defense. Kelly Intelligence CEO Kevin Kelly joins us now to lay out a trade on the name. Kevin.
Hi, Melissa. Well, that's right. Raytheon's down about 2% this year, while it's the number one constituent in the industrial sector, which is up 5.5%. So it's not participating with its sector, but that provides a unique and interesting opportunity, we believe, given the fact that there's secular tailwinds for Raytheon. 60% of its business is defense. And what we've seen even recently is that there's been a recent contract to sell $619 million worth of weapons to Taiwan, and Raytheon's going to provide the missiles. And that's emblematic of their defense business, which is expected to grow over the next 3 years because the EU is actually going to increase their defense budgets over the next 3 years. Japan is increasing their defense spending by 26%. But the kicker for the stock is actually its commercial side of the business, which is starting to recover. We know the commercial space is seeing supply chain improvements, as well as a lot of the airlines are needing more parts and aftermarket services. So Raytheon has this kicker for its earning per share with the commercial business coming back to be better than pre-pandemic levels. So the nice part about it is it's a free cash flow machine, which is very good for investors because they'll probably increase their dividend, which is already indicative of about 2.4%, as well as do some share buybacks. So what's interesting about the stock, given the fact that it's underperformed its sector and it's the number one constituent in the XLI, is that you can go out here and buy the stock today around $99. And then what you want to do is you want to sell a call against it. Let time be on your side and go out to May. And you can sell that May 19th, 2023, 105 call for about $1.65. And so you're going to get the dividend payments. You're going to get this nice options premium of just under 1.8%. And then you can let the decay happen and let the stock try to rebound that total of 8% that it's been underperforming the entire sector. Now, why we chose the May strike at 105 is because that's the highest open interest for the stock.
All right. Kevin, thanks. Kevin Kelly. Mike, what's your take on the trade?
Yeah, I mean, I think we're getting to the upper end of the valuation range for this thing. There's a war in Europe. There are tensions in Asia. We are looking at top line growth. I do like the name, but I do also believe that the upside's probably a little bit limited. So I think the trade's a good one.
Carter.
So interestingly, while the stock has underperformed the industrial sector, of which it's the largest weight at 5%, it's the largest constituent in the aerospace sub-industry group, a part of the overall industrial, at 20%. And its relative performance to the aerospace group is new relative highs. So you have true bifurcation, which is to say this is a laggard within an entire sector, but a leader within its subsector. And that's a good setup.
All right. Up next, your tweets and the final call.